All right, thanks, guys. He is the author of Zero Hour. He is the founder of HS Dent. He is the author as well of the HS Dent newsletter, an economic forecast newsletter. We have Harry Dent joining us on the show for the first time. Welcome, sir. It's great to have you. A wide range of topics we can cover here, but let's jump right into things. I want to mention the book, first off, Zero Hour. Tell us about that.
Well, you know, we had a major boom that I predicted way back in the 80s into 2007 with the baby boom generation. And then when the crash that I predicted back then started in 2008, central banks went nuts and just started printing money. And they didn't expect to print for long, but they're still printing money. And they printed more in the last 2 years than they printed in the 12 years before that. So they've had to keep printing money to keep an economy that's naturally slowing with the baby bust moving into their peak spending. So the baby boom and the next generation, the millennials, are going to bring the economy up naturally starting about 2024 onward. So between now and then, they have pushed off a major stock crash and downturn for a long time. And so we're most likely to see that crash between now and the end of 2023 before the next real trend, real people spending more money, the millennials, happens in 2024. But they've been trying to offset this slowdown forever. And I hate to say it, that's just cheating.
It's a lot of obviously catalysts that we can, kind of point to as far as what the market has done this year. But I wanted to get your opinion on the past couple of weeks here before we go any further here, Harry. We've had, just an amazing bounce off of the recent lows back to the upside. What do you attribute, this recent strength we've seen specifically to?
Well, this market is just, people have been trained since 2009, just buy the dips. So something has to happen. We've had this Russian-Ukraine war, that's a hit. But we've also seen now, and this is always the death of most stock market, especially bubble markets, is when interest rates, long-term interest rates, when the 10-year bond starts rising, and it's risen from 0.5% now to 2.5% recently. And we're also at the top of that interest rate channel. So this is where I think it breaks, that these rising rates finally breaks the stock market. The Russian war, especially if it escalates further, helps. But what I see, what it takes historically, I've studied every major bubble in history now that I realize we're in the biggest bubble ever. And it takes about a 40% crash in 2 to 3 months to break the momentum of a bubble so people don't just automatically say, oh, I got to buy every dip. That's what it takes. And so I don't say this bubble's over till I see a close to 40% crash. And we may be in that first crash now, but it has to go lower quickly in the next few weeks. If it doesn't, I think that crash is most likely to happen from somewhere between late April and July. But we are due for that. These rising rates are the final thing that makes it impossible for this stock bubble just to keep going up like there's no end to it.
Harry studies four main cycles when it comes to demographics. Tell us how, as traders, and tell us how, we're active market participants here, how can we use demographics and these four main cycles that you look at to kind of foresee what happens in the overall market?
Well, so yeah, I look for like major turning points. Now, I look at these cycles together and individually. The demographic cycle, actually the geopolitical cycle peaked in 2000. We had a crash after that. That would have been a great time to be shorting stocks. The demographic cycle peaked in late 2007. And of course, we had the biggest downturn and recession in 2008, early 2009 to follow. Now the technology cycle is what is peaking here. It's the last one peaking in early 2020. So from now into late 2023 is when all of my cycles tend to point down together. So that's a good time to be shorting rallies for a trader instead of buying them. Now, when we get to the other side of this, let's say late 2023, if we do see a substantial crash, and I do think we will by then that's when you start looking to buy down trends in the markets and play for the next rallies, because from about late 2023 into 2036 should be the next global boom with the millennials driving trends again. And then you want to be buying corrections to catch rallies. But now you're basically looking to short as a trader when we see rallies. And I think we may see one more rally to maybe as high as 5130. That's my channel for the S&P. If we see that, that may be the short of a lifetime. If we see 5130 30 on the S&P in the next month or so, we could see a 40 to 50% crash literally in 2 to 3 months, and you will never find a better short than that.
One of the interesting concepts I've been reading about, lots of people having opinions on, what if this is a lower high as well in the overall market, this bounce that we're seeing right now? What is there maybe an area that we can look to, in your opinion, to maybe signal that the drive, the fuel behind this rally might be running out? And if so, where is that? And then also, where do we go? How far down could we go?
Well, we actually are very close to since we bottomed here in this recent correction, we're just about to hit, I think it's 459, we're just about to hit the first real resistance point. So if the markets can't break above that in the next few weeks, then that would say we're likely to see this first crash continue. Now, what really makes it interesting, if the first crash continues and we do go down substantially more, say into mid-April or so, then that would be a time where you would expect to see a rebound rally that would retrace 50 to 60%, typical Fibonacci ratios, the crash that went down. So that's a play to the upside. But boy, and if we see that rally into later this year, when we see this crash go farther, we see a rebound rally that retraces 50 to 60%, then that will become the next short, because that downturn after the first crash and then the rebound that doesn't even come close to making a new high, that will be a long, like 2-year crash where the markets just go down, 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 and people can just keep shorting rallies as a trading policy for a long time. That'll be trading heaven to me on the downside.
Well, let's talk about strategy here, Harry. When it comes to maybe taking advantage of that downside move, is there a specific strategy that you kind of lean on? Is there an area of the market that you might lean on when it comes to this first or next move that you're predicting?
Well, a lot of this crash, but we had a 5-wave down into this. I mean, that looked like a completed wave for now. So we are due for a bounce here. So if the bounce can't look like it's going to make a new high, and the S&P 500 may be the only index that does make a new high. So that would be the first thing. If I'm a trader and I see this bounce continue and the S&P 500 makes a new high, maybe just a couple percent over the last high, and as high as 5130 would be a layup, then that's the perfect short, especially if the NASDAQ doesn't make a new high, and almost certainly in that case, you would not expect the Russell 2000, the small cap. So that's at a major top like this, you expect to see the leading indexes, the most broad and safest ones like the S&P, to make a new high, but other indexes like the Russell 2000 not to, and that's a sign that it's a major top. And that's when you expect that first bubble crash of 40 to 50% in 2 to 3 months. And again, you will not see a better short opportunity path. You'd have to go back to early 2000 to see that, or way into the future. So this is the biggest setup I'm looking for, but it depends on whether we can look like we're going to make a new high here near term. And I think in the next few weeks, that'll be more obvious.
Check out his latest book, guys, 0 Hour. Turn the greatest political and financial upheaval in modern history to your advantage. Harry Dent is the founder of HS Dent and the author of the Dent Forecast newsletter. We appreciate your insight, sir. Thanks for doing this.
Hey, real quick, you can get on my newsletter for free, a free newsletter at harrydent.com. That's the best way to get to know it.
There we go. Thanks. Have a great day. Great insight, guys. Interesting ideas there from Mr. Dent.